Hello, and thank you for watching the Gallagher Masterclass from Made In Group. So today we have Gallagher, who is an international leading insurance, risk management and consultancy firm based in Birmingham. With 60 firms across the UK, they're a trusted and well-known insurance broker. So today we have Steve West, who is the development executive from the Birmingham branch for Gallagher, and today he'll be hosting a 15-minute presentation on the risk of being underinsured and the importance of regular reviews for manufacturers. So thank you for joining us, Steve, and over to you.
Thanks, Jasmine. Good morning all. Thanks for joining. Yes, my name's Steve West. I'm the development executive here at the Birmingham branch. So majority of our clients, or certainly the core of our clients, are within the manufacturing sector, and this webinar is very much based around the risks that you potentially would face and how to protect yourself against underinsurance, making sure that your insurance program is aligned with the risks that you face. Before we get into that in too much detail, I just wanted to talk about some of the economic factors that a lot of our manufacturing clients are struggling with, and I'm sure you can relate to a lot of these. First and foremost, inflation rate an all-time high, around 10% at the moment. Just in terms of what we're going to be talking about around later, in terms of underinsurance, we're seeing inflation at sort of 20 to 30% in the construction sector. So that's even more relevant when considering your buildings and property sums insured. Obviously, you'll have seen supply chain distribution and lack of materials, the knock-on effects of Brexit and COVID. That's still a struggle for a lot of our clients, as I'm sure it is for you. The ongoing situation in Russia and Ukraine is another stumbling block, both in terms of supply and materials. And then the other key issue our manufacturing clients are finding is just employment. That's both retention of staff and attracting younger workforce. So I thought it important just to give you a very brief overview of where the insurance market currently is sat here in July 2022. The UK insurance market is undergoing a prolonged period of change. We've been in what we call a hard market since late 2019. What that means is in effect, insurance have been far more selective about the types of risks they want to take on. Premiums have gone up. Cover levels have gone down, excesses have gone up. So the role of your insurance broker is even more critical now in conveying the appropriate information to insurers and presenting businesses in the best possible light, and making sure they're fully ingrained in the business, they understand everything that you're doing, and that's being presented correctly to insurers to allow them to price it and offer terms at the best possible rate in the market. So moving on to underinsurance and what is underinsurance. In simple terms, it's when a policyholder has inadequate insurance cover for their needs. What generally happens then, if there's a loss, it results in a potentially serious financial loss for the organisation. So it's a key thing in getting right. Typical areas of insurance which we see again with manufacturing and wider clients: property, stock and contents, plant and equipment, and their business interruption. And in terms of the effects of underinsurance, there's a long-standing insurance clause called average, which means that if you are underinsured, then any claim would be also underpaid by whatever percentage you are underinsured by. So in the case of large claims, it's massively important that we get these figures right from the outset and they're regularly reviewed. So what are the key things that can lead to being underinsured? Valuations being out of date. If you've had your building valued 5 years ago, that might have been what the valuation was then, but certainly with the increase in materials, it probably bears no resemblance of what the rebuild cost is now. So it's vitally important you get those regularly reviewed. We often see as well there are sort of standard policy limits within policies which policyholders aren't aware of, and they mean that there's a certain level of underinsurance. But we also see that some clients decide to underinsure and not declare the correct sums insured to get cheaper premiums. But at the end of the day, if you do that, it's only going to end up costing you more money if a claim did arise. So common pitfalls, as alluded to on an earlier slide there. So in terms of property, as I mentioned, out-of-date valuations is the key one. So making sure that that's updated, if not annually, every 2 years, getting a professional buildings valuation surveyor in to do that. Change of use as well. We've seen a lot with a lot of our clients over the sort of pandemic period that they've started undertaking slightly different activities within the business, and whether these have been declared to their broker or discussed with their broker, or whether the broker's interrogating them to understand exactly what they're doing. But again, if the business has changed slightly and that's not being declared, then you could find that you're underinsured. Another important consideration on the property side of things is a lot of clients we see insure the building on the market value as opposed to what it would cost to reinstate it. So reinstatement cost is the cost of obviously bricks and mortar or equivalent building materials, but it's also taking into account things like site clearance, debris removal. So when you're setting your building sum insured, it's important to do it on a reinstatement basis as opposed to what the market value is. From a stock and contents perspective, the most important thing to remember here is that any replacement will always be on a new for old basis. So whether you've got a 30-year-old machine that you might find difficult to replace, well, you wouldn't be able to replace, you've got to bear in mind what it would cost to replace the modern day equivalent, in effect. So what that would cost. So if the machine cost 25 grand 20 years ago, but now is more like £100,000, you've got to make sure that that sum insured is reflective of that. We've also seen, again, over the last 18, 24 months, a lot of our manufacturing clients have increased their stock holdings due to ongoing supply chain issues. But again, that's not necessarily being declared or discussed with the broker. So it's vitally important, again, if you do decide to increase your stock holding because of those supply chain issues or for whatever reason, that this is reflected in your insurance program. From a plants and machinery perspective, similarly to stock and contents, new for old basis, so it's important to take that into account. And then if you've got any specialist equipment as well, it's important to think about timescales to replace those. And this moves on to business interruption. Core things there, indemnity period. So that is the period of time an insurer will pay out for your loss of profits whilst the business is unable to trade. So we're more than often see under insufficient limits of 12, 18 months, where realistically, certainly in the current state, if there's a total loss of a building, it's going to take more than 18 months to get that site cleared and get the building re-erected. So we urge most of our manufacturing clients, especially with larger sites, to consider a minimum of 36 months. So it's just another area to give some consideration to. On the business interruption side as well, the gross profit calculation is a key one and often an area where we see clients fall down and become underinsured. So the gross profit calculation under your business interruption is different to that of your accountancy one. So it's a conversation you should be having with your broker, and they are giving you some guidance around how you calculate your gross profit for insurance purposes. Another key area is that we don't often see being discussed with broker and client is the business continuity plan. So many businesses overlook this, but this is essential. Gives you a way of identifying potential risks and how you'd react to them. So it ties in well with business interruption and risk management. And that's certainly an area Gallagher sort of manage really closely with their clients and can support with. Okay, I thought I'd give you some sort of tips for preventing underinsurance, really. A few of these I've mentioned previously, but rebuild, as I say, your overall sum insured is the most you would need to rebuild and replace from absolute scratch. And we would always ask you to consider a professional valuation from a RICS qualified valuer. Limits, again, are the policy limits sufficient? And always check them against the needs of your organisation. Values, Update the new for old replacement values of all plants, assets, and the premises of your organisation annually. So this should be a consideration prior to each renewal, making sure they're adequate to replace all your stock, materials, plant, equipment on current prices. Recovery, which relates to business interruption, what I talked about on the previous slide, making sure your indemnity period is adequate to protect your business. And your sum insured should also reflect the anticipated business growth and not just past performance as well. Review, so we conduct annual reviews with all of our policyholders, very in-depth conversation about the business, any changes, obviously a review of all the assets. I'm just making sure, as I said, that the insurance program is adequate at the risk your businesses face. And then the other thing to consider is inflation as well. So more often than not, you'll see your property sums insured will have automatically been index linked in line with inflation. But this could change from one year to the next as well. So it's important that this is in line. So in terms of how Gallagher can assist or potentially assist you moving forward, what we offer initially to non-clients is a full insurance health check of their existing insurance program. Now, this is very much a confidential audit-led approach where we look at all elements of your insurance program and make sure it's aligned with the risks of the business. We look after all our clients throughout the course of the year, and we work with them to offer them support both from a claims perspective and mid-term, and then obviously during the renewal process as well. So that's a very whistle-stop tour of some tips and some guidance around underinsurance and some of the sort of common pitfalls we see amongst our clients. On the 19th of July, we are holding 19th of July 2022, I should say, we are holding a Managing Risk for Manufacturers webinar, which will be sharing some information on all the Made in the Midlands platforms. So hopefully this is a good little starter for that, and hopefully we can see you on the webinar on the 19th of July. Thanks for watching today, and I hope to see you all at a future event.